Welcome to video 4 in the Emoji Trading Order Flow video series. My name's Lee Harris, and today we're going to cover how we read the reaction of the market. When we trade with order flow, and when we consider the impact of traded volume, it's very easy to become overly focused on the visible actions of aggressive traders. We covered their activity in our previous video on aggressive and initiative activity, and it's easy to understand why we can get caught up in this way of thinking. We see lots of red and green imbalances printing on a chart, we see price moving quickly, and we want to jump on board the move for the fear of missing out on a potentially good trade. It's as important to consider though, and you know what, potentially even more important, to think about the other side of these trades that's happening. We need to ask ourselves, what is the market's reaction to the action of these aggressive traders? In basic physics, Newton's third law states that to every action there is an equal and opposite reaction. As traders looking to make decisions based upon the market's reaction to traded volume, we need to stay really alert to situations where the market does not react as we would expect it to. If we see a buyer lift the offer with 1,000 contracts, we may well expect price to rise as they buy the contracts that are being offered by sellers. But if price doesn't rise as we would expect, then there's a clear sign that the amount of supply in the market is able to absorb this level of buying. If the amount of supply is higher than the amount of demand, then price is going to fall until such point as supply and demand are matched. This fall can well be accelerated when an aggressive buyer, who sees that after buying large quantity price did not go up, actually sells their contracts, which in turn adds more supply to the market. If you trade using a regular candlestick chart, you're not going to get any visibility whatsoever of this sort of situation. By observing order flow using a numbers bar chart, you could see this situation as aggressive buying, but aggressive buying on its own is not enough information upon which to make a trading decision. We have to consider the market's reaction to the aggressive buying and make trading decisions based potentially upon what didn't happen. The Emoji Trading Order Flow suite can help bring these situations to life. There's a number of indicators that will help the trader to see when we've got absorption of aggressive buying or selling activity, and in turn it helps you to make informed trading decisions. Within a price bar, we refer to the price level where the most volume traded as the point of control. You can highlight this price level using numbers bars. Let's imagine a price bar where the maximum volume traded, the point of control, occurred at the top of the bar, but the bar actually closed lower than where it opened. It was a down bar. What this shows us is that there was a fought-out battle between the buyers and sellers using heavy volume at the top of the bar, but because the bar closed lower, the sellers won. Of course, the opposite applies if we've got the point of control at the bottom of the bar and the bar closed higher. There was a battle over price at the extreme of the bar and the buyers won. When we come across this situation, it's a pretty clear indication of which side of the market holds more power and is able to absorb the trading activity of the other side of the market. And we can use the emoji POC at extreme indicator to highlight these trading conditions. At some point in their trading career, everybody has bought the high or sold the low. Perhaps some people even do this every day. When a trader does this, they've been trapped by the larger trading power that's on the opposite side of their trade. This larger trading power has absorbed their activity, and as price falls back, it will actually fall faster as people exit their losing trades or their stops are triggered. We refer to this situation as trapped traders. The traders who bought the high are trapped and they exit their positions. When they can't take any more pain, it's known as puking. They puke their position. Likewise, people who sold the low are trapped and they will buy to cover their short position. Emoji can highlight these conditions for you. The trapped traders indicator will highlight when the actions of aggressive traders who lifted the offer or hit the bid are being absorbed by larger traders on the other side of the market, leaving those aggressive traders trapped in their losing positions. Let's revisit our absorption indicators. We covered these initially in our second video that was considering delta, specifically in the section where we were looking at intra-bar delta, in other words, the differences between buying and selling at individual price levels. As we're now considering the reaction of the market to the action of others' trading actions, let's see how the emoji absorption indicators help us identify this reaction. When we have a price at an extreme of a price bar, but price does not move in the direction that we expect, it's clear that we have a passive trader who is absorbing the initiative activity of other traders. If there is a lot of buying near the top of a bar, but price does not continue higher, we have a large passive seller who is absorbing all of this demand and has sufficient supply in order to prevent price going higher. Likewise, near the bottom of a price bar, if we have aggressive selling but price does not continue lower, it's clear that there is sufficient demand, potentially from large powerful buyers, to halt this price decline, and as these short sellers give up on their attempts to drive price lower, they may well cover their positions, which will drive price higher. We can use the emoji absorption at extreme indicator to highlight situations where the maximum amount of buying occurred at the top of a bar, but price did not continue higher. Likewise, it will highlight when the maximum amount of selling occurred at the bottom of a bar, but price did not continue lower. You can use this information to actually avoid becoming a trapped trader, and subsequently you'll be trading in the direction of the market which is supported by the more powerful traders. So absorption at extreme shows us when the buying or selling at the extreme of a bar is being absorbed, but we also saw in video 2 how certain price levels will consistently see the maximum amount of buying or selling activity. When we look at charts, it can be really hard to look horizontally for consistency at price levels. Somehow we're programmed to focus on highs and lows. We can use Sierra chart to tell us the maximum amount of buying or selling that occurred in every price bar, but there's a lot of information that gets presented. We see it in every bar, and personally I find it hard to filter out the consistent price levels amongst all the noise that's being presented on the chart. Using the emoji absorption sequence indicator, we can have Sierra chart look back across a number of bars and will highlight when the maximum amount of buying or selling occurred at the same price within these bars, and will highlight those price levels where this situation's occurred. This really helps absorption at particular price levels stand out, and can aid us in being on the right side of the market and understanding where the real-time support and resistance in the market is actually occurring. So far in our video series, we've explained how you can chart using numbers bars to get a view of the traded volume that's occurred in the market. We've also seen how by visualizing delta on numbers bars charts, you can get a sense of the buying and selling power at different times and at different price levels within the market. In our previous video, we highlighted the actions of large traders, and in this video, we've learned how to read the market's reaction to the actions of those large traders. By now, you should be starting to get a sense of how by putting these various concepts together and using the emoji order flow indicators to bring these concepts to life on your screen, you can start to interpret the market's response to trading activity and use this response to plan your own trading that's aligned to the market's response. In our next video, we're going to look at the market at a higher level than action and reaction, and we're going to be thinking about how we gauge supply and demand within the market. See you then.